Boom shakalaka. Today's video, I am joined by Bill and Mehdi, two brilliant analysts from the TOKENMETRICS team. Guys, this is probably one of the best episodes we have had on the channel in a long time. We're going to be talking about exactly what's going on with world economics, how it affects Bitcoin and cryptocurrencies, including the best altcoins that you definitely want to have in your portfolio now. And if you haven't checked it out yet, you can check out TOKENMETRICS for yourself. There is a discount link down in the description. Also down there, you'll find the Twitter accounts for Bill and Mehdi, and you'll definitely want to make sure to follow them. So stay tuned for this awesome interview. Bill, welcome back to the channel. We have some exciting days coming up for cryptocurrency, and I'm sure all financial markets. It's a pleasure to have you back. How you doing?
I'm doing good, man. It's always nice to be here. Love doing these. Love doing these shows.
Oh, we love you too. You're definitely a crowd favorite, and I think everybody gets smarter in every time you're on the channel. So I'm looking forward to it. So tell us what's going on in the next day or so that's pretty important for everyone.
All right. Well, the inflation statistics are out this morning. Okay, that's like a no S Sherlock that, inflation is much higher, right? Those numbers are less important than they used to be because wheat and certain metals mooned because the sanctions turned into a trade war. All right. So for crypto, what does that mean, right? Because that's the next question. For crypto, all right, there's a new monetary order coming. Right? It's happening, right? Like Russia and China are going to get off the dollar. And I just can't believe that every citizen worldwide isn't going to need Bitcoin, ETH, and probably Pax Gold, right? In an account that you can use a debit card with, right? In case your bank doesn't work, right? When you sanction Russia, okay, when you come down on Russia and you have an inflation problem in the US, right? The inflation problem can't be stopped by the Fed. The Fed's got to backstop European banks. Most people loan money to Russia. They ain't getting that money back. Okay. So the most important thing for crypto investors is to say, all right, there's inflation, there's war, there's all these problems. Bottom line is you got to remember, crypto is part of a new monetary order. Now, there may be volatility in the meantime. The most important thing to remember is Putin's not going to stop. We can talk more about that. European banks are in trouble, right? And there's no way when this is like 6 months into this that you're not going to literally need Bitcoin and Ethereum as money.
Wow. That's like a mic drop right there. I think we can just kind of wrap it up right there. Thank you all for joining us.
Well, I mean, I can expand on whatever part works.
Yeah, that's actually really interesting. I wasn't expecting that. So that's great to hear. So I think the question that a lot of people will be having is like, why isn't Bitcoin mooning yet? Why isn't cryptocurrency mooning yet? Because we've been range bound for a long time. And I've looked at a lot of like on-chain metrics, like entity adjusted dormancy flow and everything that's suggesting that we're very close to what would be a bottom. But it's like, why, when everything else is moving, does it seem like we're kind of still just stuck in this sideways trend?
This range?
Yeah.
All right. So I totally get it. Like the on-chain stuff that I look at, meaning Bitcoin moving to cold wallets, is just, Bitcoin's being moved out. Inflation expectations, or what they call in legacy. If you want to be cool at a legacy party, you can talk about inflation break-evens, right? Inflation metrics in the legacy bond market are at new highs. And that means ETH should be making a new high because that's the way it's been working since. So ETH should be at 4 something and it's at 2 something. What's up with that? All right, I'll tell you. So everybody thought that institutions getting involved in crypto was awesome, right? They were all going to buy, it was going to moon, and we'd watch the hedge funds buy it, as we drove around in our Lambos. Well, all right, when you have this kind of, oopsie daisy geopolitical mess, right? if institutions lose money in European stocks, if they lose money in Russian stocks, if they lose money in bonds, if they have wacko things going on in currencies, guess what they have to do? They have to sell their winners. They have to kind of sell everything. You go back to 2008, there was a problem in mortgage-backed securities, but the S&P tanked. Now, what do mortgage-backed securities and S&P have to do? What do they have to do with each other? Not much. But people were just like, "Oh my God, I need to sell something. I need to short something to protect myself." Right? I mean, the Russian stock market is still closed. That's why they're selling US stocks, because that's the most liquid thing to hedge. So unfortunately, because crypto is in market cap terms is teeny weeny compared to equities, big players are like, all right, well, we got to sell something. Let's sell crypto.
Okay.
Right. And that's why when they get done with that, they're going to be sorry that they did it later in the year. Right. Like it's going to rise from the ashes in like October and November. Not to mention the fact that, like I said, I got crypto.com. I'm not making any bones about it. It's not a shill. I got crypto.com's debit card for me, and if my daughter wants her little shopping budget, she's getting a crypto.com card too, just for security purposes, in case something weird happens. So legacy institutions are basically selling everything, and crypto gets dragged into that for now.
Awesome. So now we got Mehdi joining us as well, and he's going to share some points of views here. Mehdi, you mentioned that you think we could potentially be heading towards somewhat of a recession. Can you explain?
Yes. Yeah, I'll share my screen as well later on and show what I mean, like why we are heading towards global recession. But typically and historically, whenever the oil prices have gone above $100, we have seen a recession. So if I can share my screen, I'll quickly show some of the graphics here. So there are a few reasons why when oil prices go above $100, the economy goes into a recession. So let's first explore economies that import commodity. So when you have economies that import commodity, everything goes up. Prices of everything goes up. So oil is a major import in majority of the raw material. You even need oil in order to extract oil. You even need oil in order to make steel. So everything, the prices of everything goes up. When prices go up exponentially, you have two things going on simultaneously. First thing is demand destruction. So even if I want to buy something, I wouldn't buy it. Secondly, there are some things that whatever happens, I'll still buy. For example, piece of bread. I'll still eat bread, but the price of bread has gone up because of oil and because of oil correlation with different commodities. So prices go up and there is demand destruction. Now, central banks do not have anything else but to increase interest rates. So they're forced to increase interest rate because of these dynamics, because if they let inflation run hot, people might lose confidence in the currency of that economy. So they will increase interest rate. And when interest rate increases, that's another factor through which demand decreases. So you have an situation in economy which is very horrendous. Demand is going down, inflation is high, and this typically doesn't do well for risk asset. So I would say equities as well as crypto is risk asset, but this could potentially also be a eureka moment for Bitcoin. Now let's talk about those economies which are oil exporters. Now you'll say that, okay, you know what? If I'm exporting oil, I'll do really well. That's not the case. There are also two factors going over there. The first factor is, let's say I'm exporting oil and I'm making a lot of money. But since I'm making a lot of money, I'll spend that money within the economy. When I spend that money in the economy, the inflation goes up again. And when inflation goes up again, central bank increases interest rate, and that economy also slows down. Secondly, when these economies are exporting oil, these are exporting oil to import to economies that are importing oil. And those economies, because of recession, cannot consume oil. The volume of the oil export also decreases. So we are going in a situation where there's a global recession type of scenario playing out. And interestingly, because European economies, they'll also ramp up the budget for defense, building equipments for weapons and like all that stuff. So that will also put constraint on commodities. The demand for commodities will increase, and I think the oil price will keep on increasing. So the demand for natural gas, steel, and oil price will increase because these economies will also drive oil price higher. So I don't think from a macro standpoint, the situation is that great for risk asset. But that being said, like, this could provide you good opportunities to just buy a crypto asset which you have high conviction in. So let's say last 2 years, you have spent time doing research, due diligence, use that research to buy assets that you have conviction on, and you feel like will exist after this crisis is over.
That makes sense. I saw some charts comparing, I think it was the Dow Jones during periods of war. And during a war, the Dow Jones kind of went sideways, but inflation skyrocketed. And then after the war, Dow Jones skyrocketed while inflation was kind of stable. So that kind of makes sense with what you're saying there. What's your take on things, Bill? You think, are you seeing the same thing? Do you think, I don't know, comparing with what we were talking about previously, how do you think it's going to pan out?
All right. Yeah, it's pretty clear that what's going on with commodities, I think, it's going to hurt people's pocketbook, right? But oil was at 140 and the US and the Western world carried on. Now, oil and food at the same time, that's going to dampen sentiment. But what's really going to happen, right, is people are going to start looking at the US dollar and going, wait a minute, what's up with this? Now, in crypto, we've been thinking this for, I don't know, since the beginning, right? But Joe Public is going to be like, what is up with this? Like, why am I losing purchasing power, right? People in Poland saw their currency collapse out of nowhere. People are going to be like, what is up with this? So yeah, you can have a recession. You can have higher rates. You can have lower stock prices. All right. Now, when that's over, right, when stocks have repriced, because they need to, as we all know, right? I call it monkey market, right? When monkey market reprices itself, okay, what are you going to want to own? You're going to want to own the future of tech, which was what Mehdi was talking about, right? Select layer ones and layer zeros, and you're going to want to be long the future of money. Okay, now what price you get for that, I don't know. They may sell it to you cheap. If they sell it to you cheap, laugh at them and take it, right? Because it's going to be gold, Bitcoin, Ethereum, and the technology networks that facilitate, art, social and culture, as well as DeFi. DeFi is coming back. Right? I follow a guy on Twitter who's basically saying DeFi 2.0, right, or DeFi 3.0 is going to be featuring layer 2 solutions, right? The coins aren't out yet, but, DeFi is not dead, particularly if you got problems with recession, like what Mehdi said, you got problems with banks, right? So giving up on crypto, yeah, I know people may be discouraged. Yeah, the price action is just annoying, right? All the more reason to tune in to Mehdi, Randall, and to get some guidance, because you're going to want to be there when the new monetary order kicks in, and that could happen sooner rather than later.
Absolutely. You mentioned gold a couple of times, and I want to touch on that because I saw that gold has a huge, decade-long cup and handle that just formed, and it's also been coming up. Pax Gold and also I think Tether Gold have been coming up on the daily indices on TOKENMETRICS. So what specifically are your feelings on gold?
All right. Well, I mean, me and Mehdi talked about this, right? I mean, obviously owning physical gold is a great idea. There's a lot of weird stuff in the gold market where, physical gold should be worth a lot more than it is. Gold should be worth a lot more than it is. You can get any one of 100 books by gold bugs and they'll explain it to you. All right. Pax and stuff like that, like for example, you got in a crypto.com account or any of these crypto accounts, right? Gold moons because there's a problem with fiat. Okay. That translates into purchasing power. So Pax, in my mind, is now really important, not investment advice, really important because nickel exploded so high that short sellers, right? Futures, losers pay winners. Nickel mooned so hard that the losers couldn't pay the winners and they had to get a loan from JP Morgan. Now, why am I telling you this? Because if nickel can moon, if wheat can moon, if gold can moon, if oil can moon, so can gold. Gold could go up in $1,000 increments, literally. Okay.
Yeah.
So
yeah. Long term, like I agree with Bill, but I think long term, I personally prefer Bitcoin to gold, and I'll give you a few reasons why.
Sure.
So, for example, gold right now it's $2,000 an ounce. Let's say it goes to $5,000 an ounce. Now, what will happen is the miners will have incentive to basically go down the depths of the earth and take out as much gold as you want. Now, the case with Bitcoin is whatever happens, whatever the demand is, the supply will be mathematically 22 million. So even if Bitcoin goes to 100,000, we can't change the algorithm, right? So for me, this kind of gives Bitcoin more scarcity and gives it a better premium in terms of being a monetary asset. And also, it also has the features of X code, right? You can, with the Lightning Network, you can use it as cash, you can use it to transfer value. But it's just the fact that with recent volatility, like you just have to absorb that. But long term, I think if Bitcoin doesn't go in this scenario, if it doesn't perform now, I don't know how it will kind of go to that 500,000 target price a lot of analysts will have. So if it doesn't do well in this scenario, man, I'm going to sell all my Bitcoin and just buy Ethereum afterwards.
Right. And the key is, a lot of times when mega moves happen, like a lot of people going, oh, Bitcoin's going to 100K. Yeah, of course, Bitcoin's going to 100K. But what frequently happens before really big moves occur, especially really big moves based on fundamentals we all understand, is that everyone gives up. This is like, this video, you got to pull it out 6-9 months from now, right? When everyone's talking about Bitcoin going to 7K or 10K, that's when you talk about Bitcoin going to 100K. Seen this before. Big fundamental trades happen when people give up. All right. So that's just a little something to like jot down in your trading diary or, stick in your memory with the Zen bell.
Yeah, absolutely. Because I don't think we've seen a complete capitulation from the top when we got wicked off at $69,000 or $70,000. I think there's still a lot of people. I mean, maybe it's a change in mentality of holders. I think
right.
Me personally, my feeling is that there's a lot more information now around Bitcoin and cryptocurrencies than back in 2017, 2018. Because I remember making videos back then by the seat of my pants. Like nobody knew anything about on-chain analytics. Nobody knew anything about what was going on. It was just John McAfee saying it's going to $1 million. So I guess he knows what's going on. And so, yeah, now it seems like there's a lot more information.
Right. I mean, there's a lot of information. Okay. But human nature still applies, right? Human nature still applies. And what Mehdi was talking about is, when you start having gold, when you start having oil, start having food, CNN is filled with disaster scenes every night. This can impact people's moods, how they think. Okay. And just go back to 2017, right? Ask yourself, who was selling Bitcoin at 3K? Somebody was, right? The miners killed it. They sold it from 6 to 3 in like 6 weeks back in 2018. Mm-hmm. So I'm not saying that can happen in Bitcoin. If all risk assets go down, realistically, Bitcoin could follow. The question you need to ask yourself is, what's my long-term crypto and monetary strategy? Right. And Mehdi's right. The supply of Bitcoin is fixed. Who's sitting happy, laughing is Michael Saylor, right? Even if Bitcoin goes down, Michael Saylor's like, ha, ha, ha. I bet you would love to have all the Bitcoin that I got, like central banks, big companies, even the ECB, right? Yeah. He's sitting back going, okay, guys, good luck with the dollar going forward.
Well, okay.
Yeah,
so
there's also, there's also one thing in investment, right? Mm-hmm. Yeah, winners keep on winning. So like this is one theme that I've seen across markets, whether it's equity, whether it's crypto. So I'm going to just share my graph, right? So this is Alphabet, Google stock. It has just gone up, I don't know, like 5,000% over the period of time. So if you just accumulated on your winners and had conviction, you would have been a millionaire. Same with Apple. Like it has gone like 230,000% up, like from a cent to $163. Same with Amazon stock, same with Ethereum. So I feel like if you have conviction and if you have if you have done research and you have conviction in something and you kind of saw that this is a winner and it keeps winning for me, just add on to that. And I think Michael Saylor is doing that, right? He has identified a winner. He doesn't care what happens, and he thinks it's a winner. He'll just accumulate, and if it pays off, he'll be one of the richest people in the world.
Mm-hmm. Yeah, great point. Going back to what you were saying, Bill, about Michael Saylor collecting Bitcoin, but also about how all of these different world currencies are kind of going down to nothing. So like talking about Russia not using US dollars anymore, talking about China not using US dollars anymore. This may be far-fetched, but what would be the possibility of like a currency going on a Bitcoin standard? Like we talk about central bank digital currencies, the dollar used to be on a gold standard until I think 71 or something like that. Is that even in the realm of possibility, or is that something that's totally not even possible just because, I don't know, Russia owns a certain amount of Bitcoin and nobody would be willing to do that?
Well, I mean, El Salvador did it, right? You know, the guy in El Salvador took a lot of heat for bringing Bitcoin in as a supplemental currency. Now, I don't know that Bitcoin is, I don't even know if Bitcoin is big enough to be like something that sovereigns use to back a currency. A small country could do it, right? A Bitcoin fork like Dash could do it, although every time Dash goes up, the market goes down. Heartbreaker. Okay. All right. But, you know, I think what you can have is different payment networks. Right? Countries, instead of using SWIFT, which moves the dollar around, they may adopt something like, I don't know, QNT, like we're tracking it. It's not going anywhere, but, you know, they want to build kind of a system to have like, you know, say a digital euro for Latin America. So you'd have, you know, the native currencies and the digital currencies running together. Now, could people do that with Bitcoin? Sure. Right? I think what Bitcoin needs is DeFi and a yield curve, right? So Bitcoin is awesome, right? But Bitcoin is so decentralized that, you know, nobody's gone out and built DeFi for Bitcoin. Once you can have a yield curve and issue bonds denominated in Bitcoin and things like that, right? Or trade stocks denominated in Bitcoin, you know, then you can have a more evolved capital markets in countries, right? And having Bitcoin on like a national balance sheet, meaning stores accept it, the central banks got it. It just gives the people a way to protect themselves. Because remember, the primary job of government is to protect the people. Now, crypto, we love to knock government. I got it. It's all part of the game, right? I play it. We're all there. But governments have to protect the people. And if there's a geopolitical situation, a new monetary order, right, you're going to see governments following El Salvador and saying, yeah, you know, we'll take the dollar, we'll take our currency, and we'll take Bitcoin too, right? So that's what you got to tell yourself when your altcoin went to zero and you want to rage quit crypto. Don't do it. Don't.
Mm-hmm. Well, so talking about altcoins going to zero and mentioning what Mehdi was talking about earlier with kind of when you have confidence in some winners, is it a time, not financial advice, because clearly we don't do that on this channel, but is now a time when it's good to actually sit down and reevaluate your portfolio and say, you know, maybe I only want to have like a handful or 20 different cryptocurrencies instead of the hundreds that I picked up throughout the past alt season? Is this actually a good time? Because I think a lot of people struggle with, oh, should I wait until there's another altcoin season or should I get rid of them now? Like, how do you know? Do you guys have any thoughts on that?
Well, I'll let Mehdi tell you what the winners are. I'll give you the short answer to that question. No S coins are going to make it in this type of environment, right? In other words, if you can't remember why you got into something, or it, you know, it doesn't have an analyst like Mehdi's caliber or at other firms who are saying, look, you know, these coins are going to survive and here's why, right? So, you know, you want to have like your nifty 50 or your nifty 20, all right, which Mehdi can talk about. So, you know, people in equities who held on to like ARKK, if you held on to highly speculative equities in this down trade, okay, you got absolutely wrecked. And that may go on further. So follow the example of stocks and listen to guys like Mehdi. Mehdi, tell them about it.
Yes, at the end of the day, you have to evaluate crypto assets as stocks anyways. So let's say when we talk about DeFi 1.0, a lot of the DeFi 1.0 were based on Ponzi-nomics. The token didn't have any utility apart from just being governance token. And then you have LP pools where people had incentive to provide liquidity. Once you provide liquidity, you get some reward. You take that reward and you sell it. Now, in these markets, these type of activities will be exaggerated. And same with play to earn type of games and some of the gaming and metaverse out there. Those projects that have horrible token utility and are at exuberant valuation, or some of the projects that haven't done anything apart from just giving you promises, right? Like, let's say you don't have smart contract or you don't have a project ready whilst the token is listed. I think these are some of the projects that won't do well. So my strategy is basically have exposure, again, not financial advice, to high quality layer ones and maybe Bitcoin. So high quality layer ones, I feel that will exist down the line, next 5 years. Whatever happens during this crisis, whatever happens with commodity prices, their price might go down, but they will survive. Include Avalanche, Near Protocol, Atom, Solana, Luna, Chainlink, Ethereum, and Bitcoin. So personally, I've done research on them. I have conviction on them. I feel like they will exist. And the reason why they will exist is on top of majority of these platforms, you have activity going on. So let's say if you have DeFi Ponzi, or Ponzi-like games being built, it's built on top of those platforms. So even if those games do not survive, the value will accrue to the layer one. Value will accrue to the smart contract, because in order to use these platforms or use these different verticals within NFTs or gaming or DeFi, you need to pay gas fees, and that gas fee accrues to these layer ones. So I feel in this environment, being slightly more conservative and going for these layer one, I think is a good strategy. It might not give you 100x ROI, but you can be assured that these types of platform, again, not financial advice, will survive the crisis, will survive the commodity shock. And I think sometimes it's okay to get a better exposure to the crypto industry, which will eventually do 10x, 20x, 50x, rather than chasing the next hot trend, next hot coin, next hot shiny thing. I think in this environment, this doesn't make sense for me.
Right. And for TOKENMETRICS, right, as the audience is learning, right, it's not just one aspect of research, right? Like, I do the charts and Mehdi does the fundamental research, and Mehdi's got a crew of guys looking for the next big projects for long-term holds. And in the meantime, our AI is still identifying winners on the ratings page. So when small coins pop up, our AI picked up things like Axia. It picked up, Pax Gold, right? Beefy Finance at one point. Waves is something that it's into now. So just because there's a down market or a difficult market, our AI is still finding short-term plays, and Mehdi and his crew are finding, some stuff for short-term, but the long-term plays as well, right? Because you got paid in 2018 and 2019 for doing homework, right? And if you're with TOKENMETRICS, you got guys as smart as Mehdi and a whole crew behind him, right? Helping make you smart as well. And of course, tuning in to Randall, right, here on Crypto Loves channel will also help make you smarter, as you know.
Absolutely. And if you guys haven't checked out TOKENMETRICS yet, there is a discounted link down in the description. So definitely make sure to check that out. One other thing that I'm curious about, you guys have mentioned that, the looks of things with rising oil prices, wheat prices, things like that, looks like we're heading towards a recession. So is there a time frame for how long that would be, for how long someone should prepare for? Because I always try and think back to the Great Depression, which was 6 years long or something like that. Is it something where we're looking long time frame? Could it potentially be a shorter time frame type of thing? Is there any way to tell?
All right. Well, here's what I would tell you on that. Right. So people talk about recessions, that has a lot to do with economic growth. I totally get, Mehdi gave you the 411 on a recession, right? commodity prices go up, demand goes down, and, currency problems also hurt people's ability, to pay for things and corporations to build things. And that's how you get a recession. Now, what I think is going to happen is I just think capital markets have to reprice itself. You realize the US stock market is 2.5 times the value of what the United States produces. So here's the dollar value of what we produce, and the stock market's worth 2.5 times that. So I think the recession could be, capital markets. We just need to reprice. And crypto, we know all about it, right? And equity is like, oh God, it went down 5%. Whatever. Okay. When capital markets reprice, that's going to be a shock. Now, does that create a recession from there? On top of that, I don't know. But the idea is to think about a capital market shock, right? Like sell in May and go away. Maybe Putin mails us a birthday present on July 4th. I don't know, right? Nobody knows. But that idea of a capital market shock and you being nimble, mentally ready for it to happen, because, you can know something's coming, right? If you watch American sports, you can know Michael Jordan's going to shoot the shot at the end of the game, but can you stop it? No, right? You can get mentally ready for certain things, right? But it's still a shock. And that shock may be what stuns economic growth. Now, of course, because you're listening to, me, Mehdi, and Randall, right? The idea is to be ready for the capital markets shock so that when any recession happens, okay, you've got your crypto debit card and your Bitcoin so you can make it. It's not just about Moon Lambo. It's about keeping your Chevy and your apartment, right? Moon Lambo is later, right? Think, hey, this is how I'm going to make it. Because you can turn on CNN, you can see what it looks like when people don't make it, economically, geopolitically, et cetera. So that's what I think the landscape looks like.
Yeah, in my opinion, I think the recession, even if it occurs, it won't be long term. It will be maybe 1 year to 2.5 years. The reason being, last decade, there was a narrative regarding renewable energy. So there was underinvestment in oil exploration, discovery, and so on and so forth. So now, since oil is at $130, a lot of people have incentive to just go out there and explore and take that out. So that will take 1 year to kind of play out. Similarly, in US, you have shale producer. So now they will have the incentive to go out there and take oil out. So once that activity picks up, you'll see supply increasing. And since the demand is low, I think oil price will consolidate back towards low, like $80, $70 in next couple of years. And at the moment, OPEC can't do anything because they can't increase their production supply. But I think over the next couple of years, since they'll see $100, $120 oil, they'll be very excited and then produce that. Also, you have to think about other commodities. So let's say wheat. It will take a couple of seasons for the farmers to kind of realize that there is shortages, there's more demand, there's higher prices. So they'll cultivate the land. So all of these supply constraints, I think, will start to get unlocked and unbottled in next couple of years. So I don't think it will be a very long recession. I think it will be perhaps 1 year to 2.5 years, but not more than that. I think things will consolidate. And I think this will also increase the capacity of economies to kind of have these types of shock in the future as well.
Okay, great. Yesterday there was also the crypto executive order that was first leaked by Janet Yellen and then Biden released it. Now, to me, it seemed like somewhat of a bullish sentiment towards, or maybe not bullish, but at least not negative sentiment towards cryptocurrencies. Do you guys have any feelings about that? Things that people should know? Sure.
So I think regarding like NFTs and fractionalized NFTs, things like that, Hester Pierce, AKA Crypto Mom, has said there are things that go on in the NFT market that clearly violate securities laws. Okay. Right. We won't go into the details, but if Crypto Mom doesn't like it, you notice something wrong with it. So regulators are going to feel free to do certain types of enforcements on certain parts of the NFT market, right, that violate securities laws. Now, I also think regulators I think they can come down on stable coins, right? Tether is backed by short-term bank bonds, it's called commercial paper, right? So if there's problems with banks, the backing of Tether is questionable. Not to mention the fact that the U.S. wants to control the movement of U.S. dollars, then stable coins, like getting 30% yield on a stable coin is fun, but you better make sure your stable coin is stable. That's why Luna, I think, is mooning, because it's backed by the activity on the network and by Bitcoin. Mehdi actually helped teach me that, right? So even the analysts teach each other, at our company. So I don't think they want to kill crypto, but like I said, the primary job of government is to protect the people. And let's face it, how many people have gotten rug pulled and how many people get hosed in NFTs? NFTs are the future of culture, okay? But it's a better market if the government polices bad actors. And I think it's just a permission slip for governments to go out and get the bad people. That's probably not a majority opinion, but that's how I would look at it.
Yeah, I think it's kind of a mixed bag. So in terms of protecting investors, that's good. More money will come into the space. Institutional investors will get involved. Brilliant for the whole space. But I think on the flip side, it's not that good for retail, because let's say a lot of retail investors might not be accredited. They might not be able to take participation in IDOs, ICOs, maybe become a part of a DAO or a syndicate. So it's kind of mixed bag. I think if we regulate, and if we kind of regulate, especially the ICO side of things, then it kind of makes it unfair for retail, but more fair for institution. And we have seen this happen with equity as well. So I think for this will be my generic observation. Again, another thing is, which goes against the philosophy of crypto is all about decentralization, right? Like in some way or form. And regulation basically goes against that. Like you want to be as decentralized as possible. And if you're trying to control something, then what's the point of decentralization? I'll just tell you a quick story of how I got involved in crypto myself. So in March 2020, when the COVID crisis happened, I saw opportunity in equity markets. And I was like, I'm in Pakistan, I want to invest in equity market, valuations are cheap, it's an amazing moment to kind of get into good stocks. I just couldn't, because I was in Pakistan. I had to fill IBKR form, and they approved my application 3 weeks later down the line when the whole crisis was over, and they still required some forms. KYC, AML, and I just couldn't invest. And later on, I discovered there are platforms like Mirror and Synthetics, where anybody from anywhere in the world, without any kind of complications and regulation, can participate in things that they should participate in. So for me, that was the aha moment that, okay, crypto is here to stay, and crypto is the future.
Definitely. So anything else that relevant that you guys like to share with people out there? Because I know it's been eye-opening and mind-opening just to chat with both of you and kind of get a perspective that not often a lot of us crypto people hear in terms of global markets affecting everything with cryptocurrency.
All right. Well, the first thing I would tell you is I'm reading a book written by a former intelligence analyst called Putin's Playbook. So the television shows you Putin in a conflict with, the Ukraine. But the reality is, Putin is really upset about the fall of the Soviet Union. And whether you like it or not, he's at war with us, right? There's a famous saying in the geopolitical market: you may not be interested in war, but war is interested in you. So Putin is not going to stop, right? And that can affect risk assets. So when you see on TV that, oh, the Russian army doesn't work, they're bogged down, Putin's crazy, okay? You don't have to like this guy. Of course, I don't like this guy, right? But you need to respect and understand your opponent, right? Respect and understand what this guy can do, how it affects capital markets, how you can protect yourself, right? And how this guy is going to give birth to a new monetary order. So it used to be like, hey, here's my dartboard. I'm going to throw something at my dartboard and I'm going to just get a Lambo. It doesn't work that way anymore. right? Because geopolitics and understanding what's propaganda and what's research and information. All right. So that's what I would say. What else do you need to know? Now, I know me and Mehdi are both research analysts. So, it sounds like a shill, right? And it doesn't have to be a shill for us. We would like it to be, but you need to do research, right? You need to understand stuff and you need to do homework because homework pays off later, right? In other words, think of school, right? You do your homework, but you get your diploma 4 years later. Just keep doing your homework.
Yeah, I 100% echo with what Bill is saying. So this is the market condition to basically take a step back, calm down, and basically do in-depth research, follow good crypto channels on YouTube, and try to filter noise from actual signal. Read the white papers, go on websites and see what they're trying to do, see if they have a product ready, what's the team background, and just don't take action on other people's advice, like actually do homework and build conviction. Because what happens is, let's say you take influencers' advice, which is great, the influencer might be great, but let's say even if they were right, and you see a volatility in the market where in one day a crypto goes down 70%, you might just get afraid, you might get scared. So homework and proper research will allow you the conviction to kind of, let's say there's a bloodbath happening in the market, rather than getting scared, you might go and invest more, which could eventually pay off. And for you to be in that position, it's hard work. You have to do research, build conviction, and just read extensively, listen extensively, and watch different channels on YouTube extensively, and then take a decision with conviction, and also simplify your process. You don't have to have 100 investments. Sometimes one investment in Ethereum, just dollar cost averaging between 2017 to 2020 could have made you a millionaire, whilst majority of the coin didn't do that well. So if you develop conviction in few L1s, some of them might not do well, but some of them might do exceptionally well. There's a concept in venture capital called power law. Sometimes investments increase so exponentially, the tail is so high that one good investment can cover up losses in all the other investment. So you just need one of that investment rather than chasing all the hot trends out there. Just build focus, just focus and build conviction in few ideas. And those few ideas will diversify away your risk and also give you good returns if you were right. And you can only get right if you do your due diligence and research.
Right. Think about what our boss did, Ian Bellina, with Matic and Helium in 2019. A lot of people don't know this, but in 2019, Matic pumped and then dumped 50% twice. Now, it eventually did like 1,000x, right? But Ian Bellina was not abandoning the Matic or the Helium narrative just because there was volatility, because, he knew, right? I mean, he's an expert, right? He knew, and he wasn't giving up on it, right? And of course, that yielded huge benefits, later, just like doing your homework as a sophomore pays off as the diploma when you're a senior.
Absolutely. And he was taking profit in Ethereum. And so Ethereum also went up. So he was just focused on 3-4 big ones. So Helium, Matic, and Ethereum. So he was taking profits in Ethereum, and all of those coins, after he did proper due diligence, and all of those coins did really well. So that was also a very good strategy.
Absolutely. So I think that's great advice for everyone out there. Just focus on the good coins, and like you're saying, you only need one home run, and if you focus on the good ones, eventually they're going to pay off. So thank you both so much for joining us. It's been a pleasure. I know I learned a ton. I know that the audience is going to feel the same way. And so thank you both so much for joining us and for sharing all of your knowledge. Bill, Mehdi, it's been an absolute pleasure. Thanks so much for being on the channel. We'll catch you guys later. What's up, guys? I hope you enjoyed that interview. Like I said, it did not disappoint. My mind was blown many times, and I'm sure that you enjoyed it too. If you did, make sure to check out Bill's and Mehdi's Twitter profiles down in the description. Also down there, you can find a discounted link to TOKENMETRICS. Thank you so much for watching. I will catch you later. Love you. Peace.